You're listening to 2025 The Final Drive, What You Need to Win with David Hayes.
In today's episode, I want to talk about, is life insurance a better investment than using a Roth IRA, especially for legacy? Let's first talk briefly about life insurance, and I'm going to come back to this later. Life insurance is a protected asset class under Section 7702 of the IRS Internal Revenue Code. It spells out how cash value life insurance policies retain their tax advantage status, which means tax-free. Sure, the money that goes in you pay tax on, but all of the money in the plan can grow tax-free, and when you pass away, it comes out tax-free. And oh, by the way, if you want the money while you're living, it comes out, yes, you guessed it, if done correctly, tax-free. So what's the advantages of leaving a Roth versus a life insurance policy? Let's talk the life insurance policy first. Number one, you can have a defined number. I want to leave $1 million tax-free to my son. Boom, it's done. I don't have to rely on the growth of the Roth or hoping for growth on the Roth IRA to get there. You can do an internal rate of return calculation on the death benefit and the cash value. And in most cases, the cash value will grow similar to a fixed income investment, even after the cost of insurance comes out. And early on, the internal rate of return on the death benefit is like, 10,000% or something crazy. But even if you live all the way into your 80s and 90s, it's very similar to a tax-free bond return. So the earlier you die, obviously, the better return on investment for your heirs. But we all want to live a long time. So if you live a long time, yeah, not only does the cash value grow at a reasonable rate, but the death benefit is also a decent return on investment on an apples-to-apples comparison. You can borrow against a life insurance policy. You cannot borrow against an IRA. As I mentioned before, the money grows tax-deferred, can be taken out tax-free as retirement income, or at any time. There's no age limitation on when you get that money, unlike IRAs that are traditionally around 59 and a half. The way that basically works is you take out your basis first, and then you loan against the policy. Loans are always tax-free. There's contribution limits on the Roth, right? There is no contribution limits into a life insurance policy. But I'm really not talking about comparing Roth contributions and growing a Roth IRA. I'm really comparing it more to conversions. When I take $50,000 out of my IRA and decide to pay tax on it, where do I stick it? Do I put it into a life insurance policy that has a lot of the same attributes as a Roth? Tax-free growth in the cash, tax-free death benefit, or did I put it into a Roth? Well, with a Roth IRA, obviously there's no cost to the insurance, and you can invest in whatever you want. With a life insurance policy, you have four types. You have term insurance, right? Well, that typically terms out well before you do. That's great insurance to protect against dying early. When your kids are still young, you still have a mortgage, you're trying to make sure that your family has enough money to retire comfortably if you die in your 50s. But typically, term insurance terms out before you. LIMRA studies, which is a life insurance industry thing, says that less than 1% of all term policies actually end in a death claim. That's why they're so cheap. There is universal life, which has a fixed account and is based on an annual renewable term chassis. You have variable life, which means you can invest in sub-accounts that are similar to mutual funds. Once again, I'm not a fan of that because if I'm buying life insurance, I'm usually wanting it to be somewhat guaranteed. Well, obviously variable means it's not. When times are good, it's great. When times are bad, they're not. And sometimes policies can blow up because the illustrations don't work when a variable policy goes bad. And the last one is an indexed universal life. Probably my favorite because you are indexed to the market, the S&P 500 in most cases. You're capped out maybe 10 to 12% in today's environment. Cannot lose any money on the downside, and it's built on that annual renewable chassis. So life insurance, basically the cost is the difference between how much money you have in the plan and what your death benefit is. So if I have $1 million policy with $200,000 of cash, then I'm buying $800,000 of term insurance at my attained age. That's what these policies look like. Now, the Roth IRA, again, there is no cost to the insurance. Your investments are unlimited. And you can leave the money after death in that for up to 10 years. Life insurance pays out right away. But if you're worried about changes in the laws on Roth IRAs, first of all, grandfathering has been the norm. When any tax law changes, they'll say, okay, if you were doing that before, you're fine, but going forward, this is the way it looks. So I'm not that worried about legislative changes that are going to screw up the Roth IRA, Roth conversions, everything that we've been doing up to this point. In fact, I mentioned it last week on the estate tax rules that there is no clawback, and the IRS has come out and said this, if you do planning now based on the current estate tax limits. So I'm sure that it won't happen. But if you're a guns, gold, ammunition hoarder, let's add bottled water, canned foods, and MREs, that's meals ready to eat, to the list, then you're probably worried about the laws changing on Roth and kind of screwing us all out of these wonderful planning things that we did. But I will tell you that the IRS Code 7702 is literally the most sacred tax code in all of the laws. And it is because it never gets mentioned. It's never in the crosshairs. Remember, the IRS codes are like whack-a-mole. They'll pop up, they get whacked down. They pop up, they get whacked down. But eventually they'll make their way, sometimes all the way to law. Life insurance has not even poked its head out of the hole.
Thank you for listening to this podcast. The clock is ticking. Each decision that is made today will put more money into your pocket or leave you worried about your financial future. The time to prepare is now. The time to eliminate risk was yesterday. Let's partner to help those around us to make decisions that empower their financial future. If you would like to book David for a speaking event, please contact CFC at cfci.us. You can purchase his book, 2025 The Final Drive, by going to www.cfci.us and clicking on 2025 The Final Drive.